All right, if you're watching markets right now, don't scroll. Something just shifted, and most people are completely misreading it. Silver didn't just drift higher today, it snapped higher. And the reason isn't TikTok hype or Reddit chatter. The real trigger just dropped out of Washington, and it's already rippling through global supply chains. Donald Trump announced a 25% tariff on South Korea, and within hours you could see capital moving. Fast. Stay with me here because I'm going to show you why this matters, why silver reacted the way it did, and how you can spot this setup before the headline hits next time. If you're watching this right now, you're ahead of most traders who are still trying to figure out what just happened. Before I explain what caused this move, let me teach you something most people never learn about commodities. Silver isn't just a metal trade, it lives in two worlds at the same time, one foot in industry, one foot in money. That dual role is everything. When the economy's humming, silver behaves like copper with a shinier reputation. When confidence cracks, it starts acting like gold's more volatile cousin. Think of it like a bridge. When traffic's light, nothing interesting happens. But when pressure builds from both sides, that bridge starts to creak, and markets hear that sound before the news anchors do. So, what does that tell us? It tells us that silver moves hardest when both worlds get stressed at the same time, and that's exactly what's happening right now. If this is making sense, drop a comment below and let me know what you're seeing in your markets. Here's what you need to know about tariffs. They don't just raise prices, they scramble incentives, they distort planning, they inject uncertainty into systems that depend on precision. When you slap a 25% tariff on a major trade partner like South Korea, you're not making a symbolic gesture. You're hitting autos, semiconductors, pharmaceuticals, heavy manufacturing. These are silver-intensive industries. So, when investors hear tariff, they don't think politics. They think cost structures, they think margins, they think supply chain friction. And then they ask a simple question. What asset benefits when systems get stressed? Now here's what's actually happening. Let me break down the sequence because this is where people get lost. First, the tariff announcement immediately raises expected production costs across multiple sectors. That's the primary driver. Companies that rely on South Korean components now have to factor in a 25% increase in their input costs. That's not theoretical. That's real money hitting real balance sheets. When a semiconductor manufacturer calculates their next quarter's margin and sees a massive cost spike, they're not sitting still. They're scrambling. And part of that scramble involves securing materials before prices adjust even further. Silver's one of those materials. Second, companies start hedging future input prices because uncertainty just went up. This is your confirmation layer. When trade policy becomes unpredictable, financial officers don't gamble. They hedge. They lock in prices. They buy forward contracts. They secure physical inventory. And when hundreds of companies across multiple industries all start hedging at the same time, you get concentrated demand hitting a relatively small market. Silver's market isn't like oil or gold. It's smaller. It's tighter. When demand spikes, prices respond quickly. Third, global investors look at the bigger picture and see trade policy shifting from cooperation to leverage. That's the convergence I'm talking about. It's not just about one tariff affecting one country. It's about what that tariff signals. When a major economy starts using tariffs as a tool of economic pressure, it changes the entire game. Investors start asking themselves, who's next? What sector's next? How far does this go? And when those questions don't have clear answers, people move capital toward assets that historically perform well in uncertain environments. That convergence is what matters. When all three hit at once, silver doesn't creep. It jumps. But here's the part that should make you pay attention. This isn't just industrial demand driving the move. Here's what's wild about this. Silver's one of the few assets that benefits from both sides of the fear equation. On one side, industrial demand doesn't disappear just because trade gets messy. Factories still need silver for solar panels, electronics, medical equipment. That demand's structural. It doesn't vanish overnight. On the other side, monetary confidence erodes when global systems feel unstable. And when people start questioning whether the current trade framework can hold, they start looking for stores of value that sit outside the system. Gold does that, silver does that. But silver does it with industrial tailwinds backing it up. So, when a tariff like this drops, silver gets pulled higher by fundamentals, not fantasy. You're not seeing speculation here. You're seeing legitimate demand, meeting legitimate concern about future supply and cost structures. And now, let me show you what very few people are talking about. This isn't about one tariff, it's about a regime shift. When trade becomes a pressure tool instead of a cooperative framework, volatility becomes structural. That's when silver stops behaving politely. That's when the dual nature of silver, the industrial plus monetary role, creates a feedback loop that pushes prices higher in ways that surprise people who only understand one side of the equation. Now zoom out and this starts to look very familiar. This is the exact same playbook we saw during the US-China trade war in 2018. Silver lagged at first. People dismissed it. Then the tariffs stacked. More sectors got hit. Uncertainty spread. And silver exploded. It didn't happen overnight, but it happened decisively. Go back further to the 1970s. Trade disruptions, inflation fears, monetary uncertainty. Same setup, same response. Silver repriced higher as systems moved from trust-based to enforcement-based frameworks. Every time global systems move from cooperation to leverage, from predictability to pressure, silver eventually reprices higher, not overnight, but decisively. In 2018, silver went from around $14 an ounce in early summer to over $17 by fall as tariff escalations continued. In the 1970s, as the Bretton Woods system collapsed and trade relationships fractured, silver went from under $2 an ounce to nearly $50 by 1980. I'm not saying we're headed to $50 silver tomorrow. I'm saying the pattern repeats. When you look at the pattern, silver doesn't surge because people get excited. It surges because systems break down in predictable ways. Now, let me be skeptical for a moment, because I want you to hear independent thinking, not just hype. Could this fade? Of course it could. Markets overshoot, headlines get walked back, policies change. Trump's announced tariffs before that got negotiated down or delayed. And yes, there are always voices screaming manipulation or claiming this is all coordinated pump and dump schemes. Could this be manufactured drama? Maybe. Here's the thing. It doesn't actually matter whether this is strategic posturing or genuine trade policy. The mechanics are what matter. Focus on what you can control. Focus on what you can measure. Costs went up. Uncertainty went up. Hedging demand went up. Those aren't opinions. Those are inputs. And silver responds to inputs. You don't need to predict Trump's motives or decode Washington's strategy. You just need to observe mechanics and position accordingly. There are probably three types of people watching this right now. Maybe you're a long-term investor and you've been ignoring silver because it felt like dead money. You bought some years ago, it went nowhere, and you stopped paying attention. That's fair, I get it. Watching an asset sit flat is painful, but here's what I want you to understand. For you, the lesson is to watch macro triggers, not price boredom. Silver can sleep for years and then reprice violently in months when the right catalysts align. If you've been holding and feeling frustrated, this might be the environment where patience finally pays off. But don't get complacent. Watch the follow-through. One spike doesn't make a trend. You need confirmation over weeks, not days. Maybe you're a trader and you're worried you missed the move. You saw silver jump today and you're thinking, well, that's it. I'm late. Story's over. You didn't miss the story. Volatility creates multiple entries if you understand the drivers. If this tariff's the start of a broader trade conflict, silver's going to move in waves. It'll spike, consolidate, spike again. Your job isn't to catch the exact bottom. Your job's to understand the thesis and wait for pullbacks that give you good risk-reward. Don't chase out of FOMO. Let the price come to you. If the fundamentals are real, you'll get another shot. Or maybe you're new and just trying to make sense of why metals move at all. You're watching Bitcoin, you're watching tech stocks, and silver feels boring and old school. If that's you, remember this one rule. Assets move hardest when they solve more than one problem at the same time. Silver's doing that right now. It's solving the industrial supply problem. It's solving the monetary uncertainty problem. It's solving the inflation hedge problem. When an asset addresses multiple concerns simultaneously, demand converges from different directions, and that's when you get explosive moves. So, here's what I want you to answer in the comments. Which of these three describes you? Are you holding, trading, or just learning? Tell me where you are, because that'll help me create content that serves you better. So, here's where I stand. I'm not screaming to the moon, and I'm not dismissing this as noise. I'm watching three things closely. Let me tell you what I'm personally watching. First, I'm watching whether additional tariffs stack or spread. If Trump announces tariffs on other major trade partners in the next few weeks, that would indicate this is a systematic shift, not a one-off negotiating tactic. That matters. Second, I'm watching how industrial demand forecasts adjust over the next month. If manufacturers start revising their silver consumption projections upward because they're hedging supply risk, that's confirmation that this move has legs. Third, I'm monitoring whether monetary policy rhetoric starts shifting toward protection and stability. If central banks start talking more about defending currencies or supporting domestic industries, that tells us the system's moving from globalization toward fragmentation. And fragmentation's historically been very good for silver. Based on my analysis, this move wasn't random. It wasn't emotional. It was mechanical. The fundamental picture shifted because real costs increased and real uncertainty entered the system. Those are concrete developments, not speculation. The dual nature of silver, industrial plus monetary, means it responds to these pressures more directly than most assets. If history rhymes and silver continues repricing as trade tensions escalate, the move that follows could be substantial. I'm not making a price prediction here. I'm observing pattern recognition. I'm not a financial advisor. This is not financial advice. Do your own research. Verify everything I've said. Check the tariff announcements. Look at historical silver price charts during trade conflicts. Talk to people who understand commodities better than you do. Your capital's your responsibility. What I'm giving you here is framework and context, not instructions. If you made it this far, you're someone who values understanding over noise. That mentality will serve you well. Most people react to headlines. You're learning to anticipate them. Most people chase moves after they happen. You're building the skills to recognize setups before they fully develop. That's the difference between guessing and positioning. Keep that approach. Keep questioning. Keep learning. If you found this valuable, share it with someone who's trying to understand markets better. Subscribe if you want more breakdowns like this. And stay ahead of the headlines, because that's where real opportunity lives. Think critically, verify the data, and make your own decisions. Stay sharp out there.